Hello, I'm Jay Bryson, Chief Economist of the Corporate and Investment Bank at Wells Fargo, and I'm joined here today with my colleagues Tim Quinlan and Brendan McKenna. We've just recently released a new forecast, and on this 1 year anniversary of the WHO, the World Health Organization, declaring a global pandemic, we thought it'd be pretty fitting to talk about where we think we're going in terms of the economy going forward. So, Tim, let's start off with the U.S. economy. We've made some changes to our forecast recently. Where do we see the U.S. economy going?
We have, Jay, and given the fact that it was only a year ago that the World Health Organization declared this officially a pandemic, the outlook is remarkably bright here. In fact, we're now forecasting 6.4% for full year GDP growth for the current year. And if realized, that would be the fastest year of GDP growth for the US economy since 1984. And there are, I think, a few factors to understanding what's driving that. One is the virus itself has abated, or at least the case count growth has slowed considerably with the distribution of the vaccine and as social distancing measures have been widely observed. The other is the tremendous boost that we've got through fiscal stimulus. Specifically, the round which is currently passing its way through Congress right now would provide for a larger share of the distribution going into direct household checks this time than either of the prior rounds of stimulus. And as a result, our forecast for personal income growth anticipates a surge in income in the spring of this year that eclipses even the big increase in personal income that we experienced last year. And so when you think of all of this in the context of where the consumer is coming from, after having spent the last year largely working and living from home, putting off vacations and travel, there's a pent-up demand for services outlays. And not only the funds from the fiscal stimulus program, but the accumulated savings over the last year or so ought to sustain what we expect to be an unprecedented surge in personal consumption expenditures. In fact, the back-to-back quarters of personal consumption growth at a more than double-digit annualized rate would be something the U.S. economy has never experienced in data going back to the 1940s. And so that surge in consumer spending is really the basis for the brighter outlook here, Jay. Now, it's not the only factor that's driving things higher. We also have a pretty steady growth in fixed investment spending, specifically equipment outlays and CapEx spending. Industrial production and manufacturing seems to be relatively strong and on track. And despite a rise in mortgage rates, we look for the upward trajectory in residential construction activity to broadly continue. Of course, the one big concern in all of this is expectations that inflation might begin to rise. And right now, our outlook there sees the headline rate of inflation not growing faster than 3% on a full year basis throughout the forecast period. So if realized, that ought to prevent the Federal Reserve from having to raise rates too quickly and risk snuffing out this fast growth recovery that we're now experiencing. So the decline in the case counts, the rise in fiscal spending gives way to a surge in consumer spending, and that's augmented by other parts of the economy that are more or less firing on all cylinders, Jay.
Well, great. Well, thank you, Tim. That sounds very optimistic. So, Brendan, is the outlook for the foreign economies as optimistic as our outlook for the U.S.?
Thanks, Jay. Yes, actually, the global growth outlook and the growth for many of the G10 and emerging market economies is just as bright as as the prospects for the U.S. economy. A lot of the dynamics that Tim mentioned as far as case counts and household balance sheets are actually still pretty prevalent in the international economies as well. So we're talking about COVID-19 and kind of the spread at a global level, similar to what Tim was mentioning in the United States as far as confirmed cases starting to trend lower. We're starting to see those dynamics play out globally as well. So not only are global case counts starting to recede, but also vaccine distribution across the international and global economy are starting to pick up and increase as well. Just over the last couple of weeks or so, we've actually seen more people be fully vaccinated globally than we've seen total confirmed cases around the world. So that's definitely a more optimistic signal for the global economic recovery, and it gives us a little more optimism that the global economic recovery is becoming a bit more ingrained. The other thing I would mention, and Tim also mentioned, as far as household balance sheets being supported by fiscal stimulus around the world, those dynamics are prevalent internationally as well. The one caveat I would make to that is that we haven't seen the same fiscal support that we've seen in the United States. We haven't seen that materialize internationally as well. So in the case of the Eurozone, we're looking at fiscal stimulus worth a little bit above 7% of GDP. Relative to the United States, we're looking at fiscal stimulus worth well over 20% of GDP. So you can see there are some differences between the fiscal support, but nevertheless, the outlook is still pretty bright when we think about the global economy. In fact, over the last couple of months, we've actually made upward revisions to our GDP growth forecast for the global economy. As of right now, we're looking for global GDP to grow a little over 6%. That's an extremely high rate. We haven't seen a growth rate like that in decades. But nevertheless, the growth prospects are a little bit imbalanced. I would say the United States is far and away the leader and probably leading the global economic recovery. And kind of given some of the fiscal support dynamics in the Eurozone and also kind of the way COVID has evolved in the Eurozone and the United Kingdom, we expect the European recovery to lag the United States recovery. And then also internationally, within the G10, we're looking for countries like Australia, New Zealand, Canada, that have also provided a decent amount of fiscal support and also heavily reliant on commodity prices. We're going to start to see those growth prospects start to improve as well. And then on the emerging markets side, China is still leading the global economic recovery, the recovery within the emerging markets. China was quick to contain the spread of COVID. They've done a very good job at managing the spread of COVID and kind of implementing some strict contact tracing and testing procedures to, again, mitigate the spread of COVID. So we're looking for Chinese GDP growth to grow above 9% this year. And then also some other countries like India, we're looking for growth within the double digits as well. So the growth is pretty broad-based, some small divergences, but nevertheless, the growth prospects for the global economy are quite bright.
Well, great. Well, thank you, Brendan, and thank you, Tim. And thank you all for joining us today. We will have more webinars and more videos and more reports coming out in coming months to keep you abreast on all the current economic developments. We wish you all the best of health as the spring here unfolds. Thank you for joining us.